Welcome to Trading the Close on this Tuesday. I'm Toni Valliere with Verified Investing. Here's what's making headlines today. JOLTS data misses expectations with U.S. job openings at the lowest level since March of 2021. Nokia stock plunges after losing a major deal with AT&T to rival Ericsson. Johnson & Johnson is predicting a 6% minimum sales growth for next year, and Moody's cuts China's credit outlook to negative, citing rising debt risks. Well, the November rally is certainly in the rear view mirror. Stocks are mixed following the jobs data released today. Let's take a look now at where the markets stand just before the close. The S&P 500 down just 4 points. The Dow also down at 78 points. And then we have the NASDAQ up 37 points on now 39 points. Chief market strategist and master trader Gareth Soloway joins me now, and we want to talk about the big takeaways from today. A mixed day right now. The NASDAQ rebounding a little bit. What do you read in that?
Yeah, so a couple things. So you mentioned the JOLTS data, and the JOLTS data was pretty amazing because going into the open, the markets were down decently, and we started to see some selling early, and then that JOLTS data came out weaker than expected. So less job openings by a pretty big margin from expectations. I think expectations were about 9.3 million. It came in around 8.7 million. And the kicker is, everyone's like, oh, that's not good, the economy, but the markets rally on bad news right now. Because if it's bad news, it means the Fed won't hike and maybe they'll even cut rates sooner than expected. So that's what we saw. We saw as soon as we got that JOLTS data, the markets firmed up. We didn't really rally today, but it just kind of held steady. As we get later in the week, we know the non-farm payrolls report number is coming on Friday, which will be the big one. But I think that's the takeaway. If we look at the S&P 500, right? So we clearly saw this is where the market opened right here. We opened lower, and then we kind of chopped, and then as soon as that JOLTS data came out, we went up. We then did come back down, and we've just, look at that. I mean, almost no price action into the end of the day. As you mentioned, some markets are hovering around the flat line. One thing I do want us to look at on a technical basis is this right here. Now, it's amazing, right? So this is going back to mid-October. So we're talking 3 weeks ago. The markets have been in this unbelievably tight range on the S&P 500. Now, we are continuing to hammer right here, right? So we keep on hammering on this lower level, but it hasn't broken yet. And so the kicker is, for me as a technician, as a technical trader, what I'm paying attention to, as long as we're inside of here, we could go up to the top range, we could come down, we could stay in here. But if we break this to the downside, if we start trading down here, that would be what we would call a breakdown in the markets. And again, on the SPY, it's about 455.50 right now. And again, if that did break, if we start trading below this line, you start looking at a level quite a bit lower that would actually come into play. So as a technician, that's what I'm watching there. This is what I love doing. I mean, this is the price action, this is the charts, and right now it's amazing to watch the markets trade.
That keeps you on your toes. That's a big difference there.
Big difference.
Are you expecting it to break through? Are you leaning toward that, or is it just 50-50?
And that's a good question. So let's talk about this channel. So upsloping channels, right? When you have an upsloping channel, price can stay in it for a while, but upsloping channels eventually do break to the downside, right? So eventually they break like this. The question is, and this is the hardest thing even for me as a 24-year trader, is that the question is, well, when does it happen?
Yeah,
right? So you know it's going to happen, but heck, you could have thought it was going to happen over here, and then it just continued going like this for a long period of time. So you know it eventually is going to break down, you just don't know when. My guess is, with all the economic data coming out, maybe it's this week, and maybe we do see a little bit of a correction. I almost think that the markets could be setting up for a little pullback for the next 2 weeks, which would then set up that final Christmas kind of rally into year end.
Yeah, okay. A lot of big market movers, Apple being one of them today.
Yes, so in fact, that's a great point. You mentioned the NASDAQ is strong today, and this was something that I picked up on right away. So early in the morning, I'm up 6 in the morning, and I was like, wow, Microsoft's down, Apple is actually up. And Apple just took things over today, and even though most other mega cap technology stocks were actually down early, Apple was up and away across. And you can see it opened here, and then it just ripped up and it's gone sideways the rest of the day. As soon as Apple got its bid, the rest of the big cap technology stocks also caught a bid. And what's interesting here is that if you look at the pre-action, right, so the last couple days, the smaller stocks were performing and Apple was selling off and Microsoft was selling off. Today, money rotated back to those, and those are rallying while the smaller stocks are falling. I actually think the breadth of the market, so the advance or decliner, is actually a negative, so more stocks down than up. But because these stocks that are like $3 trillion are up, by the way, this one stock is bigger than the entire Russell 2000, so bigger than all the 2,000 stocks in the Russell. So the power is just, I mean, literally these stocks can control the market.
It's a lot
but
of power.
It is pretty amazing, yeah.
All right, speaking of that, Bitcoin is always a talker, but especially now. What's the latest there?
So Bitcoin continues to rock here, and you got to be impressed with the resilience and just continued grind higher. You know, one of the things I was pointing out earlier is that, you know, you were trading at around 26,000 here, and you really didn't consolidate. I mean, this was still up sloping, and so it really hasn't had any sort of significant pullbacks other than one day here on the chart, and this is that kind of final move. So I expect this to be, it could go as high as 48,000, which is another 4,000 and change dollars. That would be my maximum upside, but we're now getting into kind of what I would refer to as froth in Bitcoin, where there will be some sort of pullback. So again, a little too much on the bullish side, and it's now getting a little too extended. So this is where, again, I start inching in on a little on the short side, just as a trader. You know, it's nothing against Bitcoin. It's just I'm a trader, so I'm shorting here, covering here, going long, and vice versa.
Gotta play it safe.
But right, exactly. But in general, Bitcoin could go as high as 48. But again, you're starting to get extended now where it's up a lot with no real pullbacks. Too many bulls out there makes me worried.
Eventually it has to come down.
Yeah, it at least has to pull back. And what I'm kind of thinking is that, you know, this has now become big support right here at 38. So if it did pull back, that would be where we would find support at 38. And if it broke 38, then you're heading back to this 32, 30,000 level. But in the very least, you should retrace to 38.
Okay, any other big market movers that you want to discuss that you've been watching?
Yeah, I mean,
CBS,
wow. Yeah, so I think for the most part, it's just the big cap tech stocks that are doing really well. I do think it's worth taking a look at something like Affirm, and this is one of those perplexing charts out there because listen, it's had the run, and let me apologize for not having it up here, but basically look at the run Affirm has had. It's basically gone from $16 to now $38. It is hitting a resistance trend line, so you would expect a pullback. But what I find amazing about this is that the Black Friday sales numbers, they talked about how it was a 50% increase in people doing buy now, pay later. And again, that's great for this stock now, but I'm always a forward thinker. Yeah. I'm like, okay, wait, so that's telling you the consumer is having trouble.
Yeah.
And then eventually, if the consumer has too much trouble, they're not going to pay later. Right? I mean, all these people.
If you don't have it,
and so eventually this stock is going to probably crater in like a year or two because no one's paying them back, but they got their TVs, right? And it's one of those interesting scenarios where people in the market are very much living in the moment. Like right now, that was good news. 50% increase in buy now, pay later. They're not thinking about a year from now when no one pays for those items.
Exactly. All right, what's on tap for tomorrow since you're always thinking ahead?
Yeah, so 8:15 in the morning is our ADP private sector number. It's kind of a precursor to the jobs number. That'll be the big one after the JOLTS data today. And yeah, we're just going to be following that. Let's see what the market does tomorrow. We had a pretty quiet day today, and let's see what happens tomorrow.
All right, Gareth, thank you very much. We always appreciate your perspective, and you can watch Gareth navigate the charts in real time every weekday morning on his show, The Game Plan. That airs at 9 a.m. right here on the Verified Investing YouTube channel. And that does it for Trading the Close on this Tuesday. I'm Toni Valliere.